Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 9th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. These actions are what keeps this channel going. Additionally, the more likes this video gets, the more higher it will be in the search results, and more people will benefit from this knowledge. So please, again, don't forget to hit the like button. Stocks stalled at resistance. I still think that this could be a bear trap. However, junk bonds also look quite ominous, so I think there is a good chance we will get a pullback of some sort in the near term for stocks. Dollar has been declining lately, but I think it could bounce, and gold is currently at resistance. So let's see if it fails here and makes a new low. It's entirely possible. And oil is, I think, headed towards the low 60s. If you're a subscriber, then stay tuned. We'll cover all of the stocks: natural gas, solar, United Kingdom, Spain, Visa, Boeing, United Airlines, VMware, etc. There's a bunch of them. So stay tuned. If you're not yet a subscriber, consider signing up by going to the link in the description and signing up there. So let's look at S&P 500. So on this chart we can see four lines: the green, blue, red, and yellow lines. So these are my proprietary MasterChartsTrading.com price action indicators. Again, you can look it up in the description of the video. Now, in the past, we have shorted S&P 500 at this red support resistance line. So for example, there was opportunity here on August 26th, another one in September, and then we made the new low here on October 13th. And I thought, this was very suspicious looking candle right there where I'm hovering. Looks like a hammer candlestick, meaning that the shadow at the bottom is very long, and there's a big green real body of the candle, and it just looks like a hammer. So these types of candlesticks sometimes or quite often show that we're at the bottom, and indeed we so far have proven me correct, and we moved higher. So from October into December we've been moving higher. Now notice that I have this bunch of downward facing arrows here. So this happens when we have a security in a downtrend. So S&P 500 is in a downtrend, and we moved up towards this resistance red line, and we made a high and a close below it. So we had a bunch of those. So we have a bunch of short signals. However, I have not yet taken any of them, and I'm not exactly sure if I should be taking them. Because for some reason I still feel like this could be a bear trap. Bear traps occur when security gives us a signal to sell short. However, it immediately turns around, or very soon turns around and continues higher and takes our stop out. So bull market for S&P 500, meaning new uptrend, meaning that if we close above this level, and I'm showing it right on the chart, it's 4318. I think if we close above that level, especially on a weekly basis, I think we'll start making new record highs. We haven't done that, and notice that we're stalling at this resistance. So especially today, I was really hoping that we will continue higher and possibly take out this high from Thursday, December 1st. This did not occur. In fact, we got another short signal, so we had a high above the red line and a close below it. Now I have on this chart a level where you can see I've drawn an arrow here. It's 3867, and this is a high from November 8th. So I think this is a next logical level for S&P 500 to retest this potential breakout that we're seeing. This potential breakout right there on November 10th above previous highs. And so where did I get it from? So this chart I showed a few weeks ago, this is a 4-hour chart of continuous futures. Symbol for this is SPX 500 USD. It's a contract for difference. So it's a basically live futures at no charge. So on TradingView.com, this is the symbol, SPX 500 USD. You can track live futures to seconds. They're updated live. So this is a little bit busy chart. Especially I wanted to point out this yellow, this is called a ghost feed. I'm gonna click on it. So notice it's got this circles on it. So this is ghost feed, meaning that it's not a actual price action. It's just what I thought it's gonna be. So I started this ghost feed. I projected it here on November 28th. So that's let me see, like 2 weeks ago. And I thought we're going to continue lower towards this blue support resistance line, which is at around 3870 currently. Now again, I just showed this level high from November 8th. It's a 3867. So this is the level, and it's also currently what's called my blue support resistance line. So if the price comes down towards the blue support resistance line, kind of does something there and then closes above it, that would have been a signal to buy long. Now so far, notice of course this is a real price action, what's actually happening. We haven't gotten to this level at 3867, 3870. We're super close, and I think we will get there in the next couple of days, possibly a week or two. So what happens there would be super important for the future of stocks. I think this is a very important level for stocks to hold. Ideally, we should just kind of, come down to it, test it several times, and then rally. So what I'm looking for finally is a break above this high from December 1st, right here, this high from December 1st. Then the door will be quite widely open for a move towards bullish levels at 4318. So far we haven't gotten it, and again we're having a lot of short signals, so not a great looking chart. Dow Jones is much stronger. So Dow Jones, whereas I just showed you S&P moved towards the red line where I'm hovering right now, Dow Jones actually broke way up above the blue line, and it's currently in a bull market. So according to my system, we're actually, Dow Jones Industrial Average has re-entered bull market. So it's great news for stock bulls, obviously. Now it's overall, we need to look at the shape of the curve, and so notice just the way Dow Jones is and the way S&P is, it's pretty similar. So we need, if S&P 500 continues lower, then I guarantee you Dow Jones will do the same, and vice versa. If S&P 500 continues higher, Dow Jones will most likely break to new records. So new records are actually not that far off. This is the new record, and it's like just a few percentage points away for Dow Jones. It's just above like 3600 or so. So let's watch and see what happens, but I think a pullback is quite reasonable in the next few days to weeks. NASDAQ is lagging badly. So again, notice the shape of the curve. A low here in October, 13th of October, and barely a move higher for NASDAQ. We haven't even gotten to the red line yet, so it's very slow grind. Again, if S&P 500 moves higher, NASDAQ will absolutely follow. But right this instant, technology is lagging the general market. And the Russell 2000. So on this chart, I wanted to show. The general shape of the curve again is the same. What I wanted you to notice is the way the indicators are curving down. So notice they were up here, for example. The green line was up here, way up here, and curved down. Now we can also offset the indicators into the future and see what the future holds for us. So notice that the indicators are going to continue curving down, and this level, the lowest level for the blue line, and the reason why I'm looking at this blue line is because these are bullish levels. In other words, if we close above those levels, that means we are now in an uptrend. Not really far away for the Russell 2000. And so what I did is I did again ghost feed projection. So ghost feed just means that, you know, I'm imagining what the price action would be like. So this level right here is January 17th, where the blue line will come down closest to the current levels. And so I did a projection, very bullish projection, where we get to this January 17 line and just continue higher, and we have a somewhat bearish projection in yellow. So bullish projection is in purple and yellow, and bearish projection is in yellow. We get to that level, we break above it and continue higher, and we enter a new bull market for stocks and for Russell 2000 small caps in particular. And a bearish scenario, or a pretty, a bad scenario would be the opposite. I think we will still get to those levels, to retest those levels, but we'll get rejected there, and then continue lower and make new lows. So in my previous videos, I already noted that I think the war in Ukraine is important, and I think we need to look to January for some sort of a resolution of entire war, and I think this somehow I think this will happen in mid-January. So let's look towards January 17th for resolution of the war in Ukraine and possibly the fate of the stock market as well. Looking at high yield bonds, junk debt. So there's two ways to look at high yield bonds. So they're high yield for a reason, is because they pay a lot of high amount of coupons, or you can say dividends, because this is a exchange traded fund called JNK. So to us it pays dividends, but actually in actuality it's coupons. So down below here where I'm hovering, it says ADJ. So we can either adjust the data for dividends or not adjust the data for dividends. So currently this data is not adjusted for dividends. So in other words, if as if the security had no dividends, not paying any dividends, but if we adjust for it, you can see that the pattern is somewhat different. In fact, we're currently at resistance line, and so this is another potential negative for the stock market, because we're at resistance, and people like myself who uses algorithms to trade will start selling here, will start shorting. Well, I'm not sure you want to short junk debt, but if you had, for example, a position that you want to unwind, this would be a very good place to unwind it. So unadjusted data, we haven't gotten there yet. So which data do you believe? It's a good question. Looking at the weekly chart of high yield bonds, so unadjusted, notice that we haven't gotten to the red support resistance line yet. If we do adjust for dividends, notice we're there right now. And so previous places, it was a good place to sell short. So for example, here back in May of this year, I'm sorry, not May, back in March of this year, back in May of this year, another time here in August, and will we sell off right now? We're getting a short signal as we speak right now on the weekly chart also. So let's see what happens. Again, this is adjusted versus unadjusted data. It's difficult to say which one is better. Looking at the dollar index DXY, so I think dollar has topped. I think this was the top on Wednesday, September 28th here. And then since then we were kind of making lower lows, breaking various support levels. If you listen to my previous videos, I was describing all of the support levels in detail. We had one signal to buy. So the signal to buy, go long, was here on Monday, 21st of November. At the time, I thought if we have indeed tapped, then this could be a bear trap. Now, so far, my prediction has proven correct, and we made new lows here for the move. Now, the way things are going, I think dollar is overdue for at least an attempt to continue higher and possibly give us another long or buy signal. Now, again, I think the dollar has indeed tapped, so if we get this bullish signal, another similar like what I'm showing here on Monday the 21st of November, this could be a bear trap. So I could also be wrong, and dollar will give us a bullish signal, and indeed it will be not a bear trap. In fact, it will be not a bull trap. In fact, it will continue higher and make new highs. That is also a possibility. And looking at gold, we're now looking at XAU divided by USD. Gold, gold is currently at resistance. Already gave us a short signal. So which one would be correct, the dollar or gold? So we need to be basically looking at this with open mind. If dollar rallies, then gold will come under pressure, and very kind of good and obvious level to watch is the 1730 level. So 1730 level is basically highs from October that were broken on November 10th. We retested those same highs here on November 23rd and then continued higher. Now we do have a short signal, and again I'm wondering if this is a bear trap for gold. So if you buy gold here, or rather, if you sell short gold here, and it might just continue a little bit lower and then pop higher. In other words, you will lose money because you bet the wrong way. So let's see what happens. The situation is not clear at all for certain securities, and the situation is just very difficult in general for trading right now. Same goes for gold miners. So gold miners GDX, for example, is currently at resistance at the red line. So if we sell it short here, will it continue lower towards the new lows, and how far will it go even? But the signal is there right now, so to sell short gold miners. And let's wrap up today with oil. So oil, wild scenarios. I read some of the predictions from big trading houses like Goldman Sachs, and they were saying, oh, we're going to have $200 oil when the war in Ukraine broke out. Yeah. We're currently, we just collapsed basically. So this is a top of oil problems, or rather top of war here, beginning of March. Oil went as high as like 130 or so, and then unraveled and continued lower. So I wouldn't be surprised if we look at weekly charts. So here's a weekly chart of oil. Weekly chart. So here's a top in March of this year, another attempt at a new high in June. We didn't make a new high, continued lower. Entry into a bear market where I'm hovering here in August. Bear market implies that we're now in a downtrend, and now a new low this week. So we're currently at $71 per barrel. This is West Texas Intermediate futures. Brent is a little bit different, but the shape of the curve is the same. I think we can easily continue lower. This low from the November 2021 is very obvious. where I'm hovering, so it's quite likely we're going to continue to those levels, which is around $62. Knowing oil, it will probably continue lower. So the thing is that there's like nothing below. There's no support below. So I mean, the next support is like at 35. Can we get to 35? Well, maybe. So two ways is increased supply. Can we have increased supply? Sure. Can we have reduced demand? Yes. And this is what everybody is afraid of: reduced demand. If the demand is reduced, that means that there is a recession on the horizon. However, it's also possible that the world is finally waking up to the fact that oil is responsible for many troubles in the world right now, and perhaps they're switching to alternative energies. Europe is a prime example. When the war started in Ukraine, Europe was able to win itself off Russian oil very quickly, and in the same process, prices decreased. How do you explain that? Okay. So this is basically what I wanted to say for the week. If you need, rather, if you are interested, sign up at my site, MasterChartsTrading.com. I have the newsletters that I send out every day, and I also have a weekly members-only video. So for this week, for example, we will cover all of these various stocks. And you will also, if you sign up for one of the packages that has the trading indicators, so indicators are these lines on the chart, this green, blue, red, and yellow line, MasterChartsTrading.com. You can find out more about them by following the link in the description. If you have any questions, please let me know. And thank you for watching, and have another great trading week. Bye-bye.